Pricing your prospect and putting a proposal on the table, that's pretty much all that's left in the MVP discovery process. So stay tuned. Hi, my name is Thomas from Team Zuloomi. Before we go any further, please don't forget to subscribe to our channel, as we constantly add new info to make your value pricing journey an easier one. Also, to make this more of a reference for you, we have structured this video into 4 sections: preparation, pricing, an optional clarification, and finally, the presentation and close. The respective timestamps to those sections can be found in the description below, so be sure to check those out. With that out of the way, let's get to it. To prepare for pricing, I'd just like to quickly recap on where we are in the process, and this diagram gives us a good overview of that. The discovery which we have done with this prospect essentially results in 2 things. 1, a recommended risk rating, and 2, a recommended package for this particular prospect. Before we then go into the proposal development, which is really a function of pricing, as well as the whole proposal development, we send out to our prospect then. I have already logged on to Zuloomi and I'm presented with a dashboard. The prospect or client I'd like to price here, Tom Jones, is shown, and as I mentioned earlier, I'm really interested in 2 things here. A, the suggested package that came out from the decision tree, as well as my recommended risk rating, high in this particular case. So take note of these 2 things because we're going to use that. To complete the preparation, all I do is I click on the starter link there. I also open the file in Acrobat because this is an editable PDF. Before I go any further, I'd just like to highlight that the way we price prospects is different in this limited functionality app than further down. We are currently designing and conceptualizing the pricing module in the app, because what's going to happen is the data coming through from the discovery will feed the pricing module, and you will be pricing this prospect directly within Zuloomi. In this limited functionality app, what happens is we're having a pricing PDF, which is editable and which gives you all the information needed to essentially get to your first value price client in 13 weeks. So the way this file is structured is there are 2 pages up front on introduction information, supplementary information about what the file is all about, when to use the guide, about the template. The time needed, I'd just like to highlight here as well that pricing for value is a commitment. It takes a bit of time, certainly at the beginning. So you would want to set aside a good hour or even a bit more sometimes, to get through this pricing process. There are notations here on what the various icons mean on the page. So all reference material really. The second page here introduces some concepts and terms. What's the component, what's the resource type, target gross profit margin, annual admin charge, and so on, with clear references where the files are or where those fields are in the actual templates, and so on. So what I would recommend is you pause the video here, you have a read through this, try to understand, what we're trying to say here. At any point, if there is a need for further clarification, please get in touch with us at hello@zuloomi.com or also through the help system within the app itself. We are now in a position to start the pricing process in earnest. I show you page 3 of the tool here, and that essentially shows us the recommended package configuration. We do this, to give you a head start, so you don't have to start from scratch really with regards to pricing your particular prospect. It's the starter package because the recommended package coming out of discovery was starter. So how does this work? We have 4 columns here: component, which is also another way of saying activity. We have resource type, who executes the activity. What assumptions did we make when we price this activity, and what's the effort accordingly. So 0.13 hours for a client manual, for 1.5 hours to establish in the first 3 months, and then maintenance thereafter. So the total time gets normalized to a monthly effort, 0.13. We group this by resource type, because different resource types have different cost assumptions allocated. And even if you run your business by yourself, you may want to consider a different cost base against different complexities. So standard bookkeeper is one, advanced bookkeeper, and a consultant here, for instance. So what you do is have a look at that. I probably recommend to pause the video here, print out the file if not already done so, because we need this reference point as we actually adopt this package configuration here. The next part here, as part of the pricing process, is now to capture the recommended risk rating, which was a high. And really, that's another way of saying there's a high likelihood of cost overrun. So we got to be extremely careful when we really deliver this pricing engagement, or delivering this bookkeeping engagement, I should say. The next page of the tool, page 4, shows us the actual package configuration. And this now is really a way in the process of adopting the recommended configuration or changing it accordingly. The way this is done is very simple. First of all, you select yes or no to determine the applicability. Client manual, yes, I want to create a client manual. Number 2 is write the corresponding resource type on the lines provided. Note that the components are grouped by resource type. So I have my standard bookkeeper I use for this activity. My assumption is 1.5 hours to establish, no maintenance thereafter. And this takes me 0.13 hours. I do the same thing with all the other activities. Bank reconciliation, 2 accounts, standard bookkeeping, as per recommendation. So in order for you not to have to retype everything, all we're saying is, in this case, just per recommendation. And we would have seen earlier on that the recommendation here for for the bank reconciliation is 60 transactions per account. Okay, so as per recommendation, and also if we go back to the recommendation here, we have 0.25 hours for this. 0.25. Okay, next. An easy way to go from field to field is just tap your way through on the keyboard, press tab, and there are no supplier payments in this particular case. Okay. Accountant's liaison is an advanced bookkeeper, as per recommendation. And again, I'm just flipping here on the screen itself. 0.05, half an hour a year. Perfect. You get the idea. Essentially, your ability to adopt the recommendation and change it accordingly, according to that particular client scenario. We also have an opportunity here on this item 5 here to add items that you found out as part of the discovery, but not really necessarily included in the recommended package configuration. Then all you're doing is then capturing it here. Custom 1. Custom 1, yes. Standard bookkeeping activity. Half an hour per month, whatever that might be. Great. So we've done this table. Now what we're going to do is we create subtotals against resource type. So resource type standard bookkeeper. Total all that together on the right, and let's say that's a total of 1.5 hours. We do the same thing with all other resource types, and just to again reiterate, if you run this engagement by yourself, but you have different skills at the table, accountant liaison is not a standard bookkeeping skill necessarily. In this case, we said it's an advanced bookkeeper, so 0.04. Then I come here and add this resource type here again. Capture details for other components if needed, what I said earlier on. Create subtotals by resource type, which is this section here. With a calculator icon there. And lastly, on this page of adopting the package is we either retain the recommended risk rating or we capture another risk rating. We override in this case here our default risk of high to medium. Make sure you have a good reason why we do that. And that's going to be carried forward then onto the costing section, which we talk about next. Page 5 of the tool now shows us all the various costs. This page outlines the engagement costs. Even though we are value pricing our engagements, we also have a very clear understanding of the costs, the actual costs, the hard costs of the engagement. And this page is really where we capture all that. The tool works this way. We have the various fields which are shown in blue here. They are all numbered 1, 2, 3, 4, 5, and so on, 7A, 7B, and you can map that to the table here, the blue table here. So when I say determine cost rates by resource type, point 1, then these are the cost rates by resource type. $25 for a standard bookkeeper, $35 for an advanced bookkeeper, $50 for a consultant, or whatever these cost rates might be in your case. The total effort, transfer the total effort by resource type, page 4, item 6. Page 4, item 6, which is the total we have arrived here. That comes onto this number here. We do the same thing for all other resource types. We then calculate the cost. So point 3 is our fancy calculator icon again, and we calculate the cost. Cost rate, $25 times the total effort. Let's say it was 5.5 hours from the earlier table, gives us X. So the way to fill in this whole page here is really following the instructions here on the right in blue, coming from the top to bottom, filling in the sections accordingly, and that gives us essentially the total cost of the engagement. With all the costs in the bag, we are now ready to price the engagement for Tom Jones. In Zuloomi, we provide 2 pricing models. The first one is the fixed price model, and the second one is the value price model. And I talk to both of these models now. Why would I have 2 pricing models to begin with? Well, on the journey to mastering value pricing, you might decide to inject a fixed price model because you know that all components have been covered, direct, indirect components, components which you possibly haven't considered before. We have an understanding of the risk, we have the corresponding GP margin for the business. So the price that comes out at the other end of the calculations is very likely a more encompassing price that makes you a good amount of margin. So how to start here? Similarly to the cost table, we have all the relevant fields numbered, and provide the corresponding instructions on the right here. Target GP margin, for instance. If you don't have one, we have one recommendation at 40%. Earlier in the guide here, as indicated by the eye here. 40% price of labor. How do I calculate that? Well, I have my total cost, I have my margin, so I can easily calculate that. Page 5, item 7B. What's that? Page 5, item 7B is $175.31. If I quickly pop it in a calculator here, GP margin of 40%, my price is $292.18 in this case. Okay, let me go down and enter that in $292.18. And that's how you complete this price table. You just go down the various cells here, look at the calculations, look at the guidance, look at the instructions, and you'll end up at a total price of $550.85, for instance. So that's your total monthly fixed price, which then gets presented to the prospect. The other option in the pricing process of the prospective engagement is the value pricing option. Take note that the prior page addressed what we call fixed price engagement, and you either choose a fixed price option or the value pricing option. So in other words, you don't always come to this very last page, which is the value pricing page. And just a quick recap, you may want to introduce a fixed price model, in your business as you become proficient in your value pricing journey. So there's absolutely nothing wrong, with taking one step at a time as you become your value pricing professional. So the value pricing option introduced on this page requires additional skills over the fixed price model, as aspects such as key events and return on investment are introduced, in addition to the various pricing options further down the page to strengthen the case for the value priced offer. While our educational training system addresses these skills and the motivation needed to significantly improve your confidence in navigating the respective discussions that are to be had with your prospective client around the topic of value in their business. As with the rest of the tool, we have clear instructions on the right mapped to the respective fields on what needs to be done. Also, wherever you see the eye icon here, that means additional information can be found at the beginning of this guide. Given we're introducing a couple of new concepts, it might be a good idea to pause here and just go to the beginning of the guide and recap some of those points. Great, let's start. As part of the discovery process, you would have uncovered a key event, number 12, and the corresponding amount, number 13, associated with this key event. Well, let me give you an example to make this a bit clearer. The prospective client may have told you that they would like to expand to the country, but don't have any bandwidth to do so, as they're buried with working in their current business. There's a great service offering equally applicable to the country, but they are city-based mostly. So the point here is the key event is expanding, if I can do this properly, to the country. Now, they have also told us that expanding to the country would be worth $150,000 to them. So just to recap this, the key event we have been able to ascertain in the discovery process is expanding to the country. And this would be a revenue opportunity for this prospective client to the tune of $150,000. Okay, so far. So item number 14 talks about the monthly value price. So the amount going here now represents the value we are able to capture from this engagement. If we were to say we are able to capture 15% of the engagement, then our monthly investment, or the monthly amount, more to the point, becomes $1,875. where does the 15% come from? Well, you see here on the right, we're talking about 10%. The amount we are able to capture is really a question of your comfort level, your expectation, your understanding of the industry, your comfort level of the relationship you have been able to build in this short time with the prospective client, and the ability to paint a vision for them, that with our help we can realize a key event expanded to the country in this particular case. So there's no hard and fast rule. What we're suggesting is, if you have difficulties getting going here, you can start with 10% and see how that essentially maps up with all your other pricing options. So item number 15 is the analyzed investment. That's essentially this $1,875 times 12, the $22,500, which, as you remember, represents 15% of the amount associated with the key event. Well, now the last point here to talk about is the return on investment, and that's obviously coming from a prospective client's perspective, because they want an expansion to the country. They have no time, no bandwidth, no nothing. They have a plan, but there's absolutely no way they can realize this plan. So I'm looking for help to get this plan implemented at the end of the day. So just before we get going on the calculation here, I just want to recap, that again, there is more information at the front of the guide. So if you haven't done so already, just pause here, go to the front, recap some of the points around return on investments. So how do we calculate this? There is a formula on the right, but I have just created this very small calculator here to make this a bit easier. So the amount associated with the key event is $150,000. We have a monthly investment of $1,875. The annualized investment is $22,500, which we already captured, which makes this a return on investment of 567%. Again, this means by investing $1,875 a month in you, we can help the prospective client realize this expansion to the country, and therefore opening up that $150,000 revenue opportunity. Well, that's pretty cool, right? Great. So with the price presentation out of the way, we can now focus on the pricing offers. In Zuloomi, we recommend employing the decoy pricing strategy, which essentially presents 3 offers to the prospective client. Why decoy pricing? Well, if you have 3 prices on the table, essentially it increases the chances of a sale. If I have 1 price on the table, which most of you might have to this point, then the prospective client can say yes or no. Well, now with the decoy pricing, I have more options, so therefore I have a higher chance of making a sale because we have different scope associated with the various offerings. So the other aspect of this is, it also increases profitability across the business, but I think that's a topic for another video. So how do we fill this in? Well, we just simply follow the numbers like we have done up to this point, and we start with number 17. 17 says transfer the calculated price, item number 10, to this field. Item number 10 is from the fixed price option on the prior page, and that's $900, as you can see here. So all I do is I pop these $900 in here. 18 is now the scope, which goes in here. We also make the point it's probably mainly around commodity services driving compliance for the business. So let's say I'm providing tasks A, tasks B, which, like what we say here, are probably mostly around compliance, i.e. commodity services. 19, is now this side over here. We say transfer the value price, which is item number 14, right from top there, 1875, comes in here. $20 listed scope included in this offer, and the inclusions are to provide the best value offering. Okay, so we obviously still gotta do compliance here. Given this is a higher option, we do additional work here. We might even throw in, let's say, management reporting. What's really critical is that this option includes the value tasks. What do I mean by value tasks? Value task is the task or tasks or project that realizes the key event. So there's only one option in this whole price presentation which realizes the key event, and that's this best value option at 1875 in this particular case. We have this third price in between, item number 21. There I have a third price of lesser amount but close to it. So let's say this third price sits at $1,550, and we're doing task A, task B, and task C. So it's clearly an increase from a scope perspective towards the mostly compliance-based option, but there's clearly aspects missing here. The point here is given this price is very close to the 1550, the perceived value is clearly the highest in this particular option, which is why it's called the best value option here. So we want to steer the discussion, or we want to steer the decision towards the best value, not just because that's the highest revenue, but because I said earlier on here, it includes the value tasks which realize the key event expanded to the country in this particular case. Further down in the guide here, we just give you a couple more examples, of what could go into these two options here, and you can read through those at your own leisure. So what's now really left is transferring these details into a proposal document and then present this to the prospective client. The final section of this video is about the clarification and presentation. The optional clarification refers to the part of your sales engagement where you have captured all info in the tool but require some further clarification. While this may be related to any aspects of the discovery, i.e. the information gathered against the various categories such as business process, payroll, etc. Well, it may also be related to the health check you conducted on the prospective client's accounting file. Or it may be in relation to the key event, which in itself is an important aspect of the prospective engagement, given this is where you can add significant value to your prospective client's business. So whatever it may be, you should attempt to get clarity on all aspects of the engagement, given you have to deliver this engagement after this has been proposed, presented, and successfully signed off. In this context, I'd like to bring back the concept of delivery risk, which is a measure to quantify the unknowns of this prospective client. Unaddressed clarifications could potentially further impact this delivery risk, and hence the need for this optional clarification step. Let's spend a bit of time on the presentation. The last point on the value pricing page was to transfer this info to a proposal document, which then gets issued to your prospective client. Well, we sometimes get the question, well, what is included in a proposal document? And in this final stage of the video, I'd like to talk to that a bit. Let me just begin by saying whatever you have by way of presenting a proposal in today's context may be reviewed and adopted to work in the value pricing world. so you don't necessarily have to start from scratch. Having said that, there are likely some additions to your offer template today. The other aspect is the timing of the proposal. While there are value pricing experts and solutions that price a solution while being with a prospective client, we actually advocate doing this post-discovery meeting or meetings if you happen to have multiple sessions. This allows you to not only digest the info and consider the holistic picture, but therefore making it a much more complete proposal. While as for the content, the following is a good starting point for your proposal template. Firstly, a summary or overview. No one likes to read long documents, and the summary pulls together the pertinent points to facilitate a decision. This is for those who really don't have a lot of time at hand and all they want to see is the summary. Next in the template is who you engage. While this provides some background about you, the solution provider, and tells the prospective client more about your business and why you are in business. Next section is the requirements. What are we trying to improve, address, reduce? Make quicker, faster. Well, the key event, among other things, is covered here. Remember the key event we spoke about earlier? Expanding to the country? Well, that's part of the requirement section here. The next section is our solution. While this now covers the recommended package and other aspects of how we propose to address the requirements we have listed earlier. The value tasks, as covered on page 7, are again part of this section. We also want to cover the benefits of our solution to clearly make that connection back to the requirements. Lastly, the commercial consideration. While this section lists the 3 pricing options, it may list a fixed price option if you have chosen to go with a fixed price option as opposed to the value priced option. If you have the value priced option, in addition to the 3 pricing options, it lists return on investment and scope at a summary level, and finally any associated terms such as direct debit, validity of agreement, etc., etc. While you would ask me, do I put a proposal of this detail together in every single case? No, not necessarily, but given we no longer simply offer time in return of an hourly rate, we have to get better at articulating that we have understood the pain points of a prospective client and how we now propose to address them, which in turn will realize value from the prospective client's standpoint. If you do this consistently, you're well on your way to becoming a value pricing professional. Now, this is also a great place to reiterate Zuloomi's point of difference with the addition of our educational training. A number of aspects covered in this video require, I would say, a deep understanding of the decision-making process of a prospective client, and the quality training provided by our training partner equips you with the tools required towards mastery of this exciting new way of pricing. So what's left here is, I would really like to thank you for sticking around with me to the end. In doing so, you have clearly shown commitment towards future-proofing your own business and build your practice on your terms. As a final reminder, please refer to the description below on the various sections, so it's easier to recap certain parts of this video as we have bookmarked the various sections of the video. We have also indicated a reference to the whole series, should you want to recap any part of this 4-part onboarding series to Zuloomi. Please don't forget to subscribe, tell others about your great experience, and get in touch with us at hello@zuloomi.com. if we can help you in any way to get your first value price client in 13 weeks. To your success.